Hello, everybody, on this Sunday, August 17th, 2025. I am Jason Shapiro. Been a while since I've done one of these weekly videos because, quite frankly, I was on vacation. But we're back now. So what I wanted to really talk about today was consensus. And we know that over time, consensus doesn't work for a number of reasons that we can get into. But let's just accept consensus over time does not get you outsized returns because the majority of people making up that consensus don't get outsized returns by definition, in my view. So what is the consensus here? And I will say by monitoring the people I listen to on the financial news and reading a lot of research from Wall Street and all that, there's definitely consensus in the stock market out here now that people have gotten a lot more bullish. They believe the market's going to be strong into year end. However, they know that the last half of August and September are traditionally seasonally weak periods. So the consensus is that we are going to fall between now and the end of September, and that dip is to be bought aggressively to catch the move up in the second half of the year. That's what I hear all day. Everywhere I read it, I hear it all day. That's why I consider it to be the consensus. So if that's the consensus, what is the non-consensus? And the quick answer is, well, if everyone thinks it's going to go down in August and September and then go up the rest of the year, then we could say it will go up in August and September and then go down the rest of the year. That would be straight up anti-consensus. And I think that that's right, but there's a few things. Let's say that it doesn't go down in August or September. Let's say the market continues to go higher. The question then becomes, what are people saying at that point? And let's face it, could this happen? Everyone's expecting rate cuts to come in September. The market thinks that's bullish. So why wouldn't it discount that in all the way up until the rate cuts? I could totally see that happening. Especially as people are waiting to buy this dip. And by the way, if they're saying they're bullish for the rest of the year, yet they're looking for a dip, it means they might be bullish, but they're not fully invested. They're looking for the dip to get fully invested. So what happens if the market does in fact go up? Are they going to chase it in order to get fully invested for the second half of the year? Or are they going to continue to be stubborn and wait until there's a dip before they can buy it? That will determine really more the consensus later. Should the consensus now, meaning the dip, not actually happen? So we'll have to monitor that, obviously. We monitor that through still listening and still reading and also through positioning. So there's that. The other sort of anti-consensus thing I could see happening is, let's say the market does dip over the next 6 weeks. And then people do, in fact, buy that dip, which they have not done. Okay. Every one of these dips for the last 3 years has not been bought, which I can show you based on positioning stuff. But let's say they actually do buy the dip this time. And now people are super long because they've now finally put the money to work that they have not been able to get to work for a number of years here. Well, then the anti-consensus becomes, okay, there's the dip. And the market's going to dip more going into the end of the year. And that, I think, is the more dangerous, quite frankly, thing. Dangerous in terms of bear market type stuff. Because the market doesn't really give gifts like that. You know, it doesn't dip. Here, we drop 5, 8, 10%, just like you thought we would. We've given you the chance to completely load up. And then the market goes straight up. And it will be interesting if, in fact, they do try to load up into the dip. How does the market react to that? Does it absorb it and not go up as they're loading up? Or does it go up and make new highs, which would be good, obviously. But if they load up and the market can't manage to go higher while they're buying that, I think that's going to be a big problem. Don't know if that's going to happen. Don't know if the dip's going to happen. Don't know if they're going to load up. But this is what I am monitoring. And these are the things that I see as the anti-consensus here, because it's such a strong, in my read, very, very strong consensus out there right now that it's certainly worth paying attention to. Okay, so those are my thoughts here in this mid-August of 2025. We will continue to monitor these things, talk about them, observe what is actually happening rather than what we think should happen, so that we can try to make money as traders and not try to prove ourselves as geniuses. Okay? That's it. Hope everyone's doing well out there, and we'll talk again soon. Thanks. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.